Bad news coming from the manufacturing sector this morning, and that is that the sector contracted slightly last month. The Kagiso Purchasing Managers Index fell to 48.4, below the 50-point level that separates expansion from contraction for the first time since October last year. Joining me with more is Andre Coetzee. He's the head of fixed income over at Kagiso Securities. Andre, bearer of bad news yet again. To what extent, though, do you think that the World Cup might have contributed to this decline?
Stephen, yes, we've actually tried to look for the reasons behind this poor number, and certainly one of them, looking at the World Cup. So I think there is definitely some element of that in the number, but unfortunately I don't think it's the only factor that actually contributed to this lower number. I think there are others. So the World Cup is a thing that will come and go, but there are probably other factors that could be a little bit more concerning.
Of course, we still have the World Cup with us for a couple of weeks of this month, so again, we could have that added pressure to the July figure.
No, we can. You see, and I think also if you look at just coming back to the Transnet strike that everybody forgot about, and it almost seems that some of these things tend to find and work their way through the economy and stay with us much longer. So the negative impact on something like, the industrial action at Transnet has actually got quite a negative impact on the economy for longer than everybody anticipates.
Now, how about the possibility of an Eskom strike this month? Of course, we've had a couple of unions saying they want to go on strike next week. If the lights go out, factories have to close down production. That could have also a negative impact.
Absolutely, yes. No, we can't afford that, Stephen.
Andre, we saw the PMI picking up above 50 in October last year. It steadily rose up until February when it reached over 60. I think it was 60.4 points or something. Since then, it's been declining. What do you think has precipitated this decline that we have seen since February?
First of all, and I think we say it every time, that 60.4 was overly optimistic. The retraction back to the 55, 54 level we were very comfortable with. A thing that's really worrying at the moment is the fact that we've seen a downtrend now for a while, and the fact that we're below 50 now actually does not help this picture at all. So a fairly negative number. The numbers are actually coming back to more acceptable levels. We probably would have expected the PMI to consolidate between, say, 51 and 54. We would have been very comfortable with that, but the fact that it's below 50 now is definitely concerning to us.
Did you expect it to go below 50?
No, we did not.
I mean, just taking a look at some of the speed bumps that we have been experiencing. We've got Europe's debt crisis, austerity measures now being implemented in Europe, which could affect us going forward from here. We've also got slowing Chinese growth, and we had the Chinese PMI out this morning. Official PMI fallen to 52.1. The HSBC PMI just above 50, so barely in positive territory.
Yes, and that is also, again, more alarming that we're seeing those numbers coming out of China, sort of falling to below market expectations, and that will definitely have a negative impact on our PMI. Funnily enough, we've actually, in trying to explain this number, looked for some anecdotal evidence to actually support this number, and the interesting thing is, and I think we can come back to the reasons, but I think one that everybody says is the stronger rand and the impact it has on exports. And one would then basically think that there's no demand for some of our goods. There are actually demand, but the fact is that the rand has been strong consistently, and we're not that competitive. So it's not really only a demand story. It's also got to do with the stronger rand, and we're probably seeing some of that impact coming through now in the headline numbers.
Of course, back in February when we had the PMI above 60, we also had a strong rand, and the feeling then was that the manufacturing sector was adapting to the strong rand. Don't you think that's the case anymore?
Well, I think the number is not falling out of bed as we see it now. So I think in a way they have adapted, but like you said, there are some of the other speed bumps that are here now that weren't there at that time. That's actually adding to the pressure on this number.
Perhaps looking at some of the subcomponents of the index, we've got business activity down to 45.2, so that's negative. New sales orders, though, still above 50. Backlog of sales orders up a little bit, so would that indicate there is still demand for manufactured goods coming through in the economy?
Yes, it indicates that there's not a total collapse in demand, but it's not strong numbers. So there is still underlying demand, but I think there are other factors that's got a bigger influence on the headline numbers the actual local demand.
Well, something that is worrying, and that's the employment down 1.5 points to 45.9. We were discussing it with James Turp over at Nedbank Capital, and he said that is a concern, and it could perhaps force the Reserve Bank's hand later this year in cutting interest rates, perhaps.
Yes, now that is, to me, if you look at the actual impact of what these numbers mean, that is the most negative, the fact that we're seeing contraction in the employment sub-index. And yes, I'm in total agreement. Everything has changed so quickly, really, in terms of the numbers coming out. And also you can see it in the FRA and the interest rate derivative markets, starting to give a higher chance of an interest rate cut, sooner. Our view was that, we're going to see interest rates flat, but this definitely opens up the debate again for another 50 basis point cut.
How about the forward expectations of the survey? What did they tell us? Are we starting to temper our expectations going forward as well?
Yes, now quite dramatically. I think, if you look at the number, it actually shot up quite to quite high levels, and that was probably in anticipation of the World Cup and business, after the World Cup and during the World Cup. But I think, as we sort of approach the end of the World Cup, looking 6 months ahead, they are definitely tempering their expectations in terms of business conditions. Not a total collapse again, it's still above the 50 level, but definitely not as optimistic as what they were before the start of the World Cup.
Andre, what's your gut feeling? Do you think we'll have another negative month next month, perhaps as the World Cup wears its way through the system? When do you think we'll get back into expansionary territory?
I definitely think that we are going to see, I wouldn't say a worse number than this. I would hope that we could see a number above 50. I don't expect a number much higher than 50, but maybe a consolidation around the 50 or just above the 50 level, Stephen. I think that's the best that we can hope for at the moment.